Are you over 50 and you have an interest only mortgage that has now come to full term? So you're getting letters from the lender saying you need to repay this mortgage. Maybe you're panicking a little bit. Maybe you don't understand what your options are. You need to plan, you need to speak to a broker. Today, I'm going to talk you through some options that you may not have considered or possibly didn't even know existed. Not every strategy is going to be right for everyone, but I have a strategy that over the past few months, I've been able to help people not only keep their home, but buy another home and have an investment that is going to build generational wealth for them. Make sure you watch until the end because I'll be talking through it in detail, but also giving you information on why it might be suitable for you, or maybe it's not suitable for you. But either way, I'm going to make sure that you know what your options are and that you take action. My name is Anthony Lindsay, and I'm talking to people today who may be over 50. They have an interest only mortgage that's coming to term and they don't know what to do. I'm going to give you some strategies. I'll talk you through some hints and tips, but understand that you're not alone. A lot of people took out interest only mortgages 15, 20, 25 years ago, and their repayment strategy was maybe that they were going to sell the property, they were going to get a bonus, they were going to overpay and pay down the amount that they have, or maybe they just thought they were going to win the lottery, or potentially they had no plan at all. I'm going to talk you through what you need to do. My name is Anthony Lindsay. I've been in finance for over 30 years. So I've done everything from wealth management to lending to mortgage collection. So when you're hearing what I'm saying, it's not just coming from the perspective of someone who does mortgages, but I understand and I've done every part of the cycle. An important thing to remember is that your home is at risk if you don't keep up the repayments on your mortgage. So make sure you watch until the end and also understand I'm not giving financial advice, legal advice, or tax advice, and always speak to a qualified professional. So, why is this important? The Financial Conduct Authority estimates that there are still hundreds of thousands of interest only mortgages outstanding in the UK. Many borrowers are now approaching retirement with full mortgage balance still outstanding on their mortgage. So, why does this happen? It happens because someone has taken out a mortgage, and instead of doing a repayment mortgage, which would mean every month that they make the payment, the balance goes down, they're basically just doing an interest only mortgage. An interest only mortgage is a good solution for a lot of people because it means earlier on in their careers, maybe their payments are lower and they can get on the property ladder. But what's happened is a lot of people took the mortgage out 20, 30 years ago and thought that they would end up switching to a repayment mortgage, but never did. Now it's come to full term. Now they're panicking, don't know what to do, and fear that they'll have to sell the family home in order to repay the mortgage. But you don't have to sell your home. I'm going to go through some options that maybe you didn't consider. You can potentially remortgage. So, what you can do is take that loan to another lender and potentially even switch it to a repayment mortgage. You can also become a landlord. This is one of my favorite strategies and something that we're going to go through. And you can look at some other options that you may have and didn't consider. So, what happens at the end of your term? So, you got that letter. What happens now? They're going to potentially ask you to repay the entire mortgage. So, the outstanding amount on your mortgage that you've been maintaining by just paying interest, the lender will now ask you to repay that. Another thing that they might ask you to do is to sell the home. And this is the thing that a lot of people fear. And if you don't come up with some kind of solution, unfortunately, they will pursue legal remedies. Nobody wants that. Banks want to avoid that. I know you want to avoid that. So, this is why this conversation is so important and understanding what your options are, but most importantly, not waiting until the last minute, being proactive and understanding and making an informed choice. You don't want to wait. You don't want the bank to keep chasing you. So have the conversation with your mortgage broker sooner rather than later. Some people wait until the last minute. That's never going to be a good thing. Some of the options that are available are remortgaging. So, as I said, you can take the mortgage to another lender and either do a repayment mortgage, or you could do another interest only mortgage, but with a view of doing overpayments when you can. You can downsize. This is something that a lot of people consider doing as they're getting older anyway. The family home might be too big, it might be a two-story. It's just no longer suitable for you as you get older. Here's something that you want to consider. And this is something that a lot of people don't even realize that they can do. Did you know you could take the residential home you have, if you have enough equity, and convert that to a buy to let, extract some of the equity, buy another home that's smaller, buy that outright, and now have a income into your retirement as well as an asset that you can pass down to future generations? Yes, it is possible. Not everybody's going to be able to do that. Another thing to consider is maybe you want to add a child to the mortgage. So you might have a young person that lives with you anyway, is working, and will say, look, I'll go on the mortgage. That way the affordability will be there. We'll get better rates, better terms. Everything is not going to be right for everyone, but these are some things that you should consider if your interest only mortgage has come to full term. My name is Anthony Lindsay, and you want to make sure that you watch this video all the way until the end because there's a lot of important information. We're talking about over 50s who have interest only mortgages that have now come to a full term, and you don't want to sell the property. In fact, not only do you not want to sell the property, you need to buy another property because the property that you're currently in is maybe no longer suitable for you and as you get older. So I've been in finance for over 30 years, and one of the things that I see all the time is that people wait until the last minute. They don't start early. So what will probably happen is as your mortgage approaches the end of its term, you'll get a letter from the lender. Some people read it, some people don't, some people panic right away. But what you want to do is speak to a broker as soon as that letter lands, or if you know within the next 12 months your interest only mortgage is coming to full term, reach out to a broker. This is going to give you access to more lenders. It's going to potentially give you access to better rates. It's going to reduce the stress, and it's going to give you more time to research the different options that you have. Knowing that you have options is very important. You don't want to be stressed or pressured because when you received that letter saying that your interest only mortgage was coming to an end, you didn't act. You waited until it got past the due date. And then the lender is now saying, look, we need our money, or we're going to have to sell this property, or potentially legal action. You don't want that to happen. And it is entirely avoidable if you act early. Do not delay. Do not wait. Questions that you need to ask yourself. You're going to want to ask yourself a few questions. You probably know that you're on an interest only mortgage, and you probably know that you've taken it out 15, 20 years ago. But what you want to understand is when your mortgage ends. You want to understand how much you owe. Hopefully, if you're like a lot of my clients, you purchased a home 20 years ago, interest only, and you purchased in London. So the property value is shot up. This means that you'll have a lot of equity in the property. Some people understand what equity is, some people don't. So let me explain what equity is, or loan to valuation. So equity is the difference between how much your house is worth and how much you actually owe on the property. So if you bought a house in London, in one of these areas that has seen huge growth, maybe you bought it for 250, 260,000. Then it's appreciated or it's gone up in value. So maybe the house is now worth 500,000. The difference between the amount that you owe and the amount that the house is worth is your equity. This equity is just living in the bricks. As a friend of mine says, you can't pull a brick to buy a loaf of bread. So that's to say that money is stored in your home. So now that your interest only mortgage is coming to an end, it might be a good time to access some of that money, not only to pay off the current mortgage, but potentially to purchase a new home. So there is a strategy that I will be going through. Make sure that it's something that you listen to, because not every strategy is right for everybody. But what you're going to want to consider is, can you afford the repayments as you move forward? That's a question you should ask yourself. What if you stopped working tomorrow? Our bodies are not designed to work forever. So if you have a very physically demanding job, you do need to think about how much longer you can realistically work. And as I said, you want to consider how much equity that you have. Here's a real world example of how I was able to help one of my clients. So I had a client who came to me after his lender had started contacting him about his interest only mortgage. He'd built up a significant equity in his home, so he had a lot of money in his home, so it was valued way more than he owed. And he assumed his only option was to sell the property. But I told him, you don't have to sell. In fact, after reviewing his circumstances, we explored an alternative approach. Instead of simply selling the home, what we ended up doing is refurbishing the home to add some value to it. He then he then converted that into a buy to let property, took out some equity while we were doing the buy to let property, purchased another home that he could live in, and rented out the house he was living in before. Again, this won't fit everybody. Not everyone's going to have enough equity, and not everyone's going to want to do that. But it is something for this client, it was the right thing. So, what happened? We were able to put him in a position where not only did he keep the home that had all the family memories, he was able to convert that to a buy to let, take out some equity, and then buy another home. So now in his retirement, he has income from the mortgage and the other property. He also has an asset that is appreciating or going up in value. So it was a great solution for him. That solution is not going to fit everybody, but a great solution for him that he hadn't even considered. He didn't even know that it was an option. Five things that you can do right now. So these are five things that if you're on an interest only mortgage, you should be doing right now. Find out what your mortgage statement says. So look at your mortgage statement, see when the term ends, see what the interest rate is, and see how much you actually owe. Check the mortgage end date, check your outstanding balance, check the value of your home. My best advice is always don't go by what Rightmove and Zoopla are telling you, or even maybe an estate agent. So the figures that you see on Rightmove, Zoopla, and all of these online platforms, especially now at the airing of this video, those figures are usually quite high compared to what banks come back with when we do the valuation. So check the value of your home, that you know how much equity you have in your home, that if you're considering any of your options when your interest only mortgage comes to an end, if you know your equity in there and you know what the numbers look like, you can then assess your options a lot better. Speak to an advisor, speak to a professional from now. Don't wait until the last minute when the lender is contacting you. Speak to someone early. And here's why you should speak to a mortgage broker first. Obviously, as a mortgage broker, I'm going to say that, but it's important because then you'll be able to understand and assess your affordability. A good mortgage broker is going to get your income, your outgoings, and assess what you can actually afford. And therefore, they'll be able to assess if you meet the criteria for each individual lender. A good mortgage broker is not going to do that through running applications through those lenders, but instead they'll be able to look at the criteria to see what lender is best for you. This means that you're not going directly to your bank. You're not going from an appointment to appointment. You're speaking to one person who's able to look at the criteria and find you the very best deal. This is going to save you money. This is going to save you time, and this is going to save you stress. It can be really stressful when your interest only mortgage is coming to an end and you're getting letters and they're suggesting that you sell the property. It can be really stressful. So a good mortgage broker is going to be able to help you avoid that stress and make things a lot smoother, that you can make an informed choice. A final thought: hope is not a repayment strategy. So if you're living on hope and you think that hope is your repayment strategy, I just want to warn you that if you ignore it, it won't get better. So you want to make sure that you do something about it. So don't wait until the time expires and then the lender is now saying that maybe you have to sell the property. Do something in advance. The other thing is the best time to review your mortgage was 2 years ago. The second best time is today. Make sure that you're reviewing your mortgage with a broker who's got your best interest in mind and isn't just trying to get another deal. It's important that you're open and honest with your broker, that they know everything that's going on, that they can find you the best deal. How do you prepare? How are you going to prepare for this remortgage or for any of the strategies that we've discussed? Talk to your family. One of the best things you can do at this stage is talk to your family. I know it's easier said than done, but family involvement might actually help you realize that there's other strategies or things that you could do that you hadn't considered. Check your credit report. I suggest that everybody check their credit report at least once a year. Just this week, I had a someone that's in one of my social circles advise us that, someone had taken out a £5,000 loan in her name. She's stressing out. Because she didn't take it out, the banks will have remedies for that, but it's a stressful situation. This can be avoided if you're checking your credit report regularly, because then you can see if people are making searches. You can see if a loan is on there that you didn't take out. So check your credit report regularly, whether or not you're doing a mortgage. You should check your credit report regularly. Speak to an estate planner. So if you are over 50 and you have an interest only mortgage coming to an end, speak to an estate planner as part of the conversation that you're having with a broker. An estate planner and a broker will be able to support you in resetting your finances, resetting your property, and making sure that whatever you want done as far as legacy is in place and it's tax efficient. I'm not giving tax advice or legal advice, and I'm certainly not giving financial advice. I'm just saying that these are conversations that you need to have with qualified professionals who understand your circumstances. And look at all your finances. Look at your finances holistically and realistically. So don't just have a bank statement that you don't go through line by line. I often find that people have multiple things that they're paying out on that they no longer need. Some things are duplicates. Some things are maybe they signed up for something and didn't realize it became a subscription. So look at your finances, get rid of anything that you don't need, anything you're unsure of, question. These are the ways that you're going to position yourself for not only the best mortgage, but also reduce your outgoings that you have greater affordability. A few more tips. Think about estate planning and wills. So, a will and estate planning are usually done together, but make sure you have a will. And if you do have a will, make sure that you've reviewed it recently. Maybe you've had additional grandchildren that you want to include. A lot of things can change. You should really look at your will once a year, or when there's a major life change, like one of your kids has had a grandchild or, whatever. So make sure you look at your will. Think about your long-term health needs. So if your interest only mortgage is coming to term and one of the things that you're looking at is maybe downsizing, consider what kind of house you want. Do you want a two-story home, or do you want a home where if one of your kids or grandkids want to come and stay with you and just hang out with you for a while, they have space? Think about those things as you go into this season. Speak to an estate planner and speak to your mortgage broker. It doesn't have to be me, but speak to someone that they can go through a lot of the options that maybe you hadn't considered or didn't even know existed. My name is Anthony Lindsay, and I make these videos to share financial and mortgage related information with you. It's not tax advice, legal advice, or financial advice. You should always speak to a qualified professional and make sure that they understand your personal circumstances, and your home could be at risk if you don't keep up the repayments on your mortgage. Make sure you like, share, and subscribe. And if there's a topic that you'd like for me to cover off, put that in the comments. This is a really small channel, so all of your feedback helps the YouTube algorithm know that the information that I'm sharing is useful and that you enjoy it. If you know anyone that is over 50 with an interest-only mortgage, or maybe that's you, make sure you go through this video again and reach out to me. My QR code is right there. You won't speak to a PA or a VA. You'll speak directly to me. And I don't charge anything for appointments, to give information, and to answer your questions. So thanks for watching, and make sure you like, subscribe, and share with a friend or family member.